viewers, and thanks so much for being with us on India Today. You're watching the Business Today show with me, Chaiti Narula. Let's begin with all the top stories. Shares on Dalal Street struggle for direction for the second straight session on worries of higher interest rates in the U.S. Benchmarks ended in the negative territory with both Nifty and Sensex closing with 0.5% cut. The Indian economy shows signs of resilience, says Prashant in an exclusive chat with BTTV. Expresses optimism over foreign inflows, says he expects FII flows to improve going forward. Sectorally, remains bullish on financials, adds that he sees alpha opportunities in private banks. Summer setting in early this year with temperatures soaring 2 to 5 degrees Celsius above normal across states, implying greater threat to crop health. Worries set in for wheat farmers yet again. Stay tuned to Business Today show over the next 30 minutes for a detailed coverage. Shares of Hindustan Zinc hit one-month lows after center opposes mining major Vedanta's buyout of company's $3 billion zinc assets amidst flaring concerns over valuations. The move comes as a blow to billionaire Anil Agarwal's plans to trim debt. Quick look at how the markets performed today. It was the day of lackluster trading on Dalal Street on the back of mixed global cues, coupled with investors eyeing the U.S. Federal Reserve's rate hike decisions. The benchmarks, let's bring those up on your screens now, closing the day in the red. Nearly 100-point decline on the Nifty, ending the session at day's low on your screens right there. Sensex giving away a little over 300 points to close to settle above the 60,000 levels. Let's bring you the broader markets on your screens at the moment. They were seen mirroring similar flattish moves throughout the day. And now to the sectoral indices that closed in the red, barring IT and auto names. We'll get you those sectoral indices on your screens as well. At the moment, we're getting you how the Sensex and Nifty performed right there in the trading session. Top Nifty gainers right there on your screens. Divi's Lab, Ultratech, Tech Mahindra, top gainers on Nifty today, followed by mild gains coming in from Power Grid and Hindalco. A 6% cut on Adani Enterprises that took up the top loser spot on Nifty. Cipla witnessed steep losses of little over 6% mark. Britannia, BPCL, UPL following the trend with losses anywhere between 1 to 2% that you can see right there on your screens. Staying with markets as equities continue to tread waters amidst volatility and investors maintaining a cautious stance over central bank activity and almost 1 year of the Russia-Ukraine war. Even as things have evened out and supply chain logistics have returned to normalcy, what is the road ahead of the average Indian investor? Will the FII flows witness further improvement? India Today's global business editor Udayan Mukherjee caught up with White Oak Capital's Prashant to understand his views on the markets and the road ahead.
I think there will be both sides, Udayan, the growth aspect as well as the interest rate aspects. Hard to just look in isolation the interest rates as a factor. You would recollect very well during 2003 to 2007, in the midst of rising Fed rates, the flows were still very strong because the economies all around the emerging markets were booming. So I think there is still possibility that interest rates remain. And we have to remember the data points aren't like a reversal or a major reversal. We are talking about, interest rates peaking instead of 5.25 to maybe 5.25, 5.5 or thereabouts. It's maybe a somewhat higher, not a dramatically higher regime that we're talking about. If for some reason inflation were to have a revival to higher levels, and then that means a substantially higher interest rate regime than what can be considered within a ballpark of where we are today, and then that forces a much sharper slowdown down the road for the global economy and the EM economies, that could be a negative scenario. But if it is, we're talking about modestly higher interest rates but an overall stronger economy without doing as much damage to the economy as was feared last year, then net might not be that negative for EM flows. And India being, as you know,
Okay.
nearly
Speaking of
80% of Indian flows are a
yeah,
function
please go ahead.
of EM flows. So if EM flows are to turn south as they were last year, then India can't be, aloof to that. Uh, so that remains to be seen on how EM overall does in terms of flows.
Right. Speaking of flows, Prashant, how did the whole Adani episode over the last few weeks shift the mood towards India, if at all? I mean, do you think it has done anything to color the judgment of global investors that you may be speaking of all the time? Were they rattled? Were they shaken by this episode?
To some degree, there were heightened inquiries, Udayan, and we fielded a lot of questions as well from our global investors on implications. We had, client calls and webinars and whatnot. So there were a lot of questions, and there were worries of spillover, contagion risk. Can it, bring down the Indian markets? Was one of the concerns. But I think as Indian markets have held up quite well, by and large, and the broader EM has pulled back during this time as well, and Indian market hasn't necessarily even underperformed over the last 3 weeks or so. I don't know the precise numbers, but just thinking through my head, I think Indian market might even have outperformed at least month to date by small amounts, but it is very different from what was feared about, underperforming quite substantially. I think those fears have receded, Udayan. Now hardly anyone is asking about, the contagion effect of the developments on broader Indian markets.
Hmm. That contagion actually was feared, Prashant, largely on the lenders to the Adani group, many of which were actually public sector banks. You've always been a big supporter and owner of the private sector financials. When this episode happened, did you feel vindicated that you were not such a big owner of the public sector financial space and you've always restricted yourself more or less to private sector financials?
So, great question again, Udayan. I want to be mindful of what I say. I would say, look, in this case, I think from what the comments and statements that have come out from across the banking sector, I think the exposures are nothing out of the ordinary, and the reason to own more private sector over time, and we continue to as a team, like several of the private sector banks, is that the alpha opportunity that we find there is a lot more compelling than at public sector banks. Though those public sector banks have also done very well over the last couple of years. So vindicated might be a strong word, but yes, we continue to like, for a variety of reasons, private sector banks.
When you say private sector, is it the trinity of the big ones with ICICI, HDFC and Kotak, or have you gone down the ladder and looked at some of the smaller private sector names?
So I'll say more broadly, well-run private sector financials, and there are some non-banking financials as well. Obviously, Udayan, as you know, I can't speak about individual names, but we have in our portfolio several non-banking financial companies as well. The idea is that, in banking, you have to have strong liability franchise. With some of the larger banks that you're talking about, they have very strong liability franchise that contains your cost of funds. If your cost of funds are low, you can afford to be picky about the asset side of the balance sheet, and you can pick the right risks if you're doing your job well, executing well. And even with a lower yield on assets, you can generate more than adequate profitability once you have a strong liability franchise. In case of NBFCs, the liability side is not as big a differentiator, but if you develop a strong niche in certain asset category, as several of these strong NBFCs have done over the decades, they've developed mastery in a particular asset class or more than one asset class, be it in consumer durables, be it in automobiles, be it in gold loans. I'm not saying we own each one of these, but there are different NBFCs who've developed strong execution expertise in these niche areas. They can, even if their cost of fund is in line with other NBFCs, they can generate outsized returns for a long time to come.
But the one wrinkle in the financial space, in the non-banking space, has been insurance, Prashant, more so after the union budget. I mean, if there's one sector which got hammered after the budget, it was insurance.
Yes.
Did you own a lot of insurance stocks in your portfolio, and have you had a revisit or a rethink after the provisions of this budget on that space?
Certainly, we have evaluated this as a risk at all times because, this risk was out there. Obviously, it materialized in this budget. Some of that has materialized in this budget. So the insurance exposure in the portfolio wasn't that substantial, but certainly there was some exposure to insurance. And whenever some such thing happens, you have to reevaluate the position in either direction. Regardless, even if you don't own, you would reevaluate. And yes, the team did reevaluate the thinking on the insurance companies. And it is a negative, there's no doubt. I mean, for insurance.
So you're no longer as optimistic as you used to be?
That would be fair to say. At least in the near to medium term, there would be some adjustment, there would be some rebasing, and we would then know what is the real volume of demand that wasn't driven by these tax benefits. So there would be some reset. How big that reset is yet to be seen.
The other space you've been consistently optimistic on has been consumption, discretionary consumption. Which parts of it are looking attractive to you now? Because autos have begun the year quite well. I mean, we've seen some, even from a stock perspective, stocks like Tata Motors have done very well. The numbers are encouraging from the likes of Bajaj Auto, Maruti as well. Have you had reason to up your weightage or look at the auto space or consumer discretionary in a more positive light?
No, very true, Dan. I think besides financial services, I would say consumption is a area, and the third one would possibly be IT services, where the team always finds a great number of companies to pick and choose from. It's more the fact, Udyan, that there's such a large number of, and a variety of business models in this space. Very well run, entrepreneurially run. Yeah, consumer discretionary, as you can, agree, has large number of mid caps, small caps, and some large cap names as well, which are very well run and governed. It's not a space that attracts governments anywhere in the world in competition, if you will. So there are a lot of names, a lot of ideas to pick and choose from, and great ideas, alpha generating ideas, and hence the team has always had that. To your specific question, even now we do have ideas in consumer discretionary, including some of the auto names, which we've held for quite some time now. And obviously all auto names have done quite respectably this year. We have names in, let's say, without being very specific, jewelry segment. That's a segment where besides the demand year after year, what you see is a very long pathway for organized sector to continue to take market share from unorganized sector. Even after 20 years, 30 years of that journey, we are still at very early stages of that. And it's there are many other segments like jewelry, where the discretionary, the companies in the discretionary organized space are actually leading the shift from unorganized to organized. And we have such investments across several industries. I just mentioned jewelry as one example.
Don't forget to catch the entire conversation on our YouTube channel and our official website, businesstoday.in. Meanwhile, select Adani stocks have seen a downward slump to almost one-year lows. The stocks have slumped to 76%. The Adani total share nosedive 5% to hit 52-week low. A similar trend was seen in Adani transmission stock as well. We're bringing you that on your screens too to take a better stock of the moves. Adani total gas slumped to a whopping 76% in 20 straight trading sessions. Meanwhile, you had Adani transmission losing nearly 34% in 8 consecutive sessions. Centering our focus now to the common man's plight. Parts of India searing as select states record a spike in temperatures higher by 5 to 10 degrees Celsius. the sudden surge seen in states of Gujarat, Maharashtra, Goa and Karnataka. Meteorologists warn of conditions worsening than what we saw in 2022. As of last week, the drastic changes were recorded in temperature. Gujarat's Bhuj warmed up as much as 40 degrees Celsius, followed by deviations of almost 7 to 8 degrees in Jammu and Kashmir. The national capital recorded 29 degrees Celsius, the highest in the month of Feb in 2 years. To better understand what's leading to these searing temperatures, let's hear out the rationale from the Vice President of SkyMet, Mahesh Palavan.
फरवरी के महीने में ही रिकॉर्ड तोड़ गर्मी दर्ज की जा रही है। राजस्थान के कई इलाकों सहित गुजरात में सामान्य से काफी ज्यादा तापमान बने हुए हैं। 6 से 7 डिग्री अबव नॉर्मल टेम्परेचर है। दिल्ली में भी 7 डिग्री अबव नॉर्मल टेम्परेचर, मैक्सिमम टेम्परेचर दर्ज किया गया, 31.5 डिग्री था। और पहाड़ों पर भी पूरे यानी कि जम्मू कश्मीर से लेकर के हिमाचल, उत्तराखंड और लद्दाख, ये सारे इलाकों में भी जो मैक्सिमम और मिनिमम टेम्परेचर सामान्य से ज्यादा है। उसका कारण ये है कि एक तो वेस्टर्न डिस्टर्बेंस जो फरवरी में आते हैं वो कमजोर हो गए हैं, लगातार आ रहे हैं, लेकिन वेस्टर्न डिस्टर्बेंस के बीच में गैप नहीं है। अगर गैप नहीं होता तो जो उत्तरी हवाएं हैं उनको ये रोक करके रखते हैं और उत्तरी हवाएं जब चलती हैं तभी वो तापमान को गिराती हैं, कंट्रोल करती हैं। तो उत्तरी हवाएं सेट नहीं हो पा रही, इसीलिए ये जो तापमान है बढ़े हुए हैं। अभी ये जो वेस्टर्न डिस्टर्बेंस निकला है उसके पीछे दूसरा वेस्टर्न डिस्टर्बेंस 26 तारीख को आएगा, तो 22 से 24 के बीच में थोड़ा सा ड्रॉप हो सकता है, लेकिन इतना ज्यादा ड्रॉप नहीं है, सामान्य से ऊपर ही तापमान बने रहेंगे। तो कुल मिलाकर के ये है कि आगे भी इस बार जो सीजन है गर्मी का वो सामान्य से ज्यादा गर्मी देखेगा और जो बारिश और जो प्री मानसून गतिविधियां वो भी थोड़ी सी कम हो सकती हैं और जो टेम्परेचर है वो और हीट वेव की जो इंटेंसिटी और फ्रीक्वेंसी है वो ज्यादा हो सकती है।
Now these early summer-like conditions are sounding alarm bells for wheat farmers. Farmers fearing to repeat of last year's disastrous surge in temperatures, leaving crops shriveled. Back in March last year, the soaring mercury led to 2.5% decline in wheat output to 106 million tons, even amidst rising exports, amidst dwindling supplies rooted in geopolitical tensions. Despite an export ban on wheat, India's wheat inflation has been in the double-digit territory over the last 8 months, keeping overall inflation at elevated levels. Now, to counter the impact of such heightened inflation, Centre went ahead and slashed reserve prices of wheat from the Food Corporation to 2,150 rupees per quintal for bulk consumers under open market schemes. My colleague Sakshi Batra spoke to agri-economist Vijay Sartana to understand the impact on crop output amidst the inflationary pressures.
This is a very important development, as we have seen last year also. When the seed setting happens for the winter crop, there is requirement to have a particular temperature range so that proper seed setting should happen. Last year, we have seen that problem with the wheat crop, whether it was a reduced yield or shrinked grain formation, that was due to wheat, this climatic impact because of higher temperature. This year also, because wheat season yet to, we have to harvest and the temperature is already high. So we have to be very careful about the conditions. I'm sure that state governments must be doing field surveys and giving suitable instruction to the farmers. But we have to be careful because these trends are really shifting. And also the same with mustard, because that's also a parallel crop which happens in the same season. So now climate change is actually impacting the food security around the world. One is due to uneven weather implications and also due to the seed setting, which is vital for food production.
Right. So do you also believe this could have an impact on wheat yield and the crop output for this year?
It may happen because we have to just monitor it, and as the IMD is forecasting, see, if every 5 degree increase in temperature, there will be a direct impact of about 20% yield. Now, it depends upon what is the crop status, what is the seed formation status. And sometimes you can address it by some form of irrigation and better nutrition. But seed setting happens in an open air. A temperature at that time is very, very vital. One has to look at it. And now this is adding new challenge to India's food security, this climate change. So this may impact yield and quality both.
Okay, and what about inflation? Would it also lead into higher inflation because of the impact on the crop output?
I don't think inflation will be that much because we have it, if you look into total production and consumption within India, we have sufficient stocks and the production is more than what we need. What will happen is the surplus which we used to generate, that will go down.
Okay.
It may have a psychological impact on the trade. They may not be able to do enough milling or stocking as they used to do. Maybe because of psychological factor, there may be some zones where prices may go up. But all depends upon, we have to wait till March end or April, what is the actual cost, what is the quality and the yield of wheat crop.
But 100% this will impact the surplus amount that we would always register. That will go down for sure.
Yes, because if we are producing about 110, even if that goes down by 5% or 10%, it is 5 to 10 million tons. So that's why there is a surplus impact which will happen, and other industries which are dependent on wheat or exports or processing industry may get impacted. But overall, I don't see a food crisis in India, but definitely surplus may have impact.
But what will happen to the exports and our policies over there? We had noticed that the government had restricted the exports due to the higher global demand and back home also as well. So looking at the current condition, what could be the impact on exports?
See, exports anyway depends on the international prices. If prices are good and if we have whatever surplus we have, then Government of India should continue their G2G policy. Instead of opening up in a free private market, government can offer wheat to the countries, those who need it, on G2G basis, and the last year's policy may continue when it comes to wheat exports.
Shifting focus now to the EV space, as many as 6 OEMs have been selected to supply over 6,000 electric buses to states under the first tender of the National E-Bus program. Ashok Leyland, Switch Mobility, JBM Auto are amongst the few winning bidders. According to bidding details, the said e-buses are going to be supplied to 6 states that include nearly 4,000 buses to Delhi, thousands to the state of Telangana, 550 buses to Haryana, some 750 buses to Kerala, 150 to Gujarat and a meager 10 buses to the state of Arunachal Pradesh. As per the contract, the selected companies are expected to not just supply and maintain services in these states, they will also have to develop the required EV infrastructure on a contractual basis. Mass layoffs citing cost-cutting bid due to the economic slowdown rocked tech industry. Major global tech companies like Google, Amazon, Microsoft, Meta witnessed mass layoffs in the past few months. However, amidst the massive layoff saga, TCS or Tata Consultancy Services stood out and said the company is not considering any layoffs. In fact, the company is looking forward to hire employees who have lost their jobs during the tech layoffs. TCS employs over 600,000 or 6 lakh people and is planning to announce hikes similar to earlier years. Well, that's it from me, Jayati Narula, on the Business Today show. Keep watching India Today and don't forget to log on to indiatoday.in or download our app. Thanks for tuning in. Thanks for your time. Wishing you a very good night.